Okay, so let's go back to where we were, and I'll show you how we've solved that. And it makes this trade very easy to take. Okay, so here we are back to the start of the day. Now, there are individual training videos on each of these indicators. So if you're unfamiliar with what you're looking at here, this being essentially a MACD Bollinger Band, this being a very sophisticated, well, this is essentially, you can think of it as an RSI. Again, if you want to know more detail on the wicked waves, you can just watch that video. And same with the devil's pitch. So, but what I want to focus on here is what's happening right here. So when you look at this retracement right here, right? So we've just opened, the market's gone straight up. So here's one of those times where, oh, maybe it's earnings, whatever, maybe it's response to the Fed's discussion yesterday. Doesn't matter. We open up and we get this nice move up. Well, then we get four bars down. Now that's a bigger retracement than you realize, right? So just looking at it, it looks like, oh, there's nothing there. What's the big deal? Well, okay, let's just measure it. Well, that's actually 23 ticks. Right? It's 115 bucks. Now, again, if you're in a 5 lot and you waited to buy that until you got a buy signal, you broke the golden zone here, and you're in a 5 lot, and all of a sudden you've got $115 per lot drawdown, that might be just enough to spook you out of the market. All right, well, but that's not the trade. Buying that there is not the trade. What I want you to see here is what happens on the retrace. So we can establish here that I've got a low, I've got a higher high, I get a higher low, now I get a higher high. So I can just in market structure here, I've got an uptrend going on. I can look here. So again, not to digress in here, but I've got a 21, a 55, a 100, and a 200. So all the moving averages are pointing higher. Everything here, we're above the zero line in both of these tools. The devil's pitch is green. So everything is saying buy, 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 right? Do you want to just buy that? No, you don't. Where's the buy? The buy happens here. We wait for the retracement. Back to where I started the entire thing. What we're looking for is the swing, the retracement that goes external. So here it is. Now you say, well, wait a minute. I know I've seen your training where you're constantly looking for a 50 or of a golden zone. That's true, and that can happen here at these degrees. But for this particular trade with this Renko template, the trade we're looking for happens right here. We see the swing. We know what the trend is. We get a shallow retracement. Now note in the retracement, look at the difference between the two. In this retracement here, we go far enough. Oh, come here, arrow. We go far enough to where we get across the river, right? So in trading language here, with a MACD BB here, the Bollinger Bands of the MACD are called the river. So at this point in time, we cross the river easily. We get across the river. That's the red dot. So we cross the Bollinger Bands. Now that tells me that the potential is here that this market could go lower. So I don't want to take the trade here because I've crossed the river. Now look at the difference when I look up here, right? So I get it's fewer bars and it's less shallow, but look what happens to the edge, right? I don't cross the river. So as a result of not getting that red dot, right? It's all about the red or the green dot. Since I don't have enough selling power or selling strength here to cross the river, I get right to the edge, but I don't get through. That's the trade, right? As it turns back up, right? And there's a couple of ways you can do it, right? So you can wait for it to break the pivot high. Often what I'll do is I'll take one as we turn back into the river, and if let me just use a line here. If I break that high, I'll add the second one here. Now you'll note here as we come back into the river, the signal doesn't to be a buyer here doesn't fire until we get all the way right. We see the arrow right here. But the trade is right here. So I would be looking to get in a little bit earlier here because one, as I come back into the river, and ideally it's when you cross the center line. If I get across that center line, the odds increase of my getting to the other side of the river. So you could wait until you get to this dot right here, which would be just prior to where the bars are Renko bar coloring per the efficiency ratio that's dictating those colors is just prior to that, and then we turn blue. Again, I realize it doesn't look like much, but there's 21 ticks, right? So from here, I've got 21 ticks to the pivot high. Retrace. Now look, excuse me. No, right here. Immediately within 3 bars, I cross the river. See, the more narrow the river is, the easier it is to get across. So conceptually, I want you to understand that when we cross the river, let me go back. Let me go over to the right edge here so I can show you this again. Let's bring it down here because I'll show this to you again. All right, if I were in a downtrend, and I've crossed the river here. As the market comes up, because now sellers have the advantage of momentum since we crossed the river, I'm concerned about this. Right? That's the conundrum. See, if you're, let me put the whole thing together. If you're in this would, this would be lower here so we get some context. Okay, so if it's swing, we come down here, but I cross the river here. All right, it would be right here. I get a red dot across the river. I know that the momentum now is going down. Sellers are in control. The momentum is going lower. So on the retrace, I'm concerned about the potential for this algo to kick in and take it, right? So right to the golden zone, they could take that right to their target. So I would have been a buyer here. I start to go up, right? I run right into the golden zone, and this side gets it. So let me now, having drawn that, let me take that back to the market and show you some examples. Hopefully I'm not belaboring the point here, but I want you to understand this here. So let's go back to that section here. Oh, I got to go all the way back. Okay, so now here, note what happens here. So built into the devil's edge, we have a TTM squeeze. So whenever we see the yellow dots here, we know that the squeeze is underway here. So we have a reduction in volatility. Right? If you're not familiar with the TTM squeeze, just Google it. It's very simple, like Keltner inside Bollinger. Okay, so when we have that contraction in volatility, well, I would tell you that caution, right? That's potentially a no trade zone. And you just look at the price action here, right? Just look at the price action. Well, first, what do you see in there, right? It's a 3, right? You just see a 3, right? So it's a little counter trend corrective wave, but we're in a squeeze. So questionable as to whether or not you want to take anything coming out of that. Now, one of the realities of the squeeze is that from that contraction in volatility often will come an expansion in volatility. But this is, these are a little crowded here. Let's see here. Let's see if I can find you a better example here. I think that price action is a little small here, so let me reset here. I'll see if I can find you a better one. I mean, these are not terrible here. Well, here would be one. Okay, so I got to zoom this out here. So on this little retrace, so we put in this top. Now we've had this little 3. Now this is actually a trade right here. Now you don't get much out of it, but so if I zoom in there, this is actually one, and then I'm going to find you a couple of better ones. But since we're here, now that little swing retracement here is actually, that's 16 ticks. All right, so from this low to this low, that's 16 ticks. It's enough. But if I open this up here, you'll note here that I start to go back towards the river. So here, get that arrow. Here's the up move, right? So it starts to go back up, right? Look at the volume down here, right? So remember, whenever you've got a wick, volume had to create it, right? The trend had to change, if only for a couple of bars. There had to be buyers to come in to reverse the downtrend here to create the wick, to pop it up. Well, as soon as it goes up, I get another wick that's also got increased selling volume, and down it goes. That's the trade right there. So you'll note down here that the edge does not even get into the river. I get one blue dot, and then it rolls back over. So the trade is right here. All right, it's only 13 ticks, but conceptually, I want you to see that. I'm going to show you some much bigger examples. But the point I want you to recognize here is that the reason there's a trade there is because we can't get across the river. It's a lack of momentum to make it. All right, let me see if I can find you some examples here that are not so condensed. Oh, okay, here's a good one coming off the low. Okay, so here we come down, down, down. Now at this point in time, it's still the IB low is not set, but I get a swing up here, all right, and then I get a higher low. All right, so the trend has been down. Well, a couple of things happen right here. Well, first, look at the bar color. Right now, look at the RSI. Look at the edge. Right, so we go up. So there's a potential. Look at the volume at the wick. right? So if I were trading this here, I'd have wicked that off here. So I know I've got a real-time support zone that the market created. Look right here, right? Because of that wick. The wick become, now look down below, right? The volume. Now look at the edge starting to go green. Look at the RSI is on the other side of the average. You could think of this like an RSI that's coming from below 20. It's trending higher. Well, we don't. Same thing with an RSI. You could think of the zero line as the 50 if you're looking at a traditional RSI. Well, I'm heading towards the zero line, but I'm not there yet. The two yellow lines are the chop zone, where that's a reduction in volatility. We really don't have trend established. That would be like an RSI waffling around the 50. You're not sure which way it's going to go, but right now, what you certainly can see, right, it's hard to miss, is the divergence down here, right? So we've got that divergence. We've got classic divergence here, right? We get a lower low here, but we do not replicate that in the RSI here, or the wicked wave, right? I'll just use RSI to make it easy for you. But note what we do get here. We get one ball, one MACD BB across the river, right? And that's what fires that arrow right there. Now, do I want that trade? Well, again, you'd be selling right into resistance, right into the potential low here. It's questionable, right? So if you look above, you wouldn't, there's not really nothing there to set it up. Here's the trade. Right here, it's coming back the other direction. So I get this swing. Here, I draw it here. This is easier. I swing up. Now I retrace. Right now, what at this moment in time, I don't know if that's going lower or if I'm going to go higher. Right? I don't know. What's my tell? Why would I consider being a buyer here? Well, one, right? If just price action alone, look what I just did. I came right down to the edge of where the support was, right? That the market created. So I've come down to that. Now look at the edge, right? The market is retracing here, but I don't cross the river. You see it, right? I don't cross the river. I come back around the other direction. Now there is a little baby squeeze that happens in there as it's waffling, right? So it's right here. So you can see this little contraction here. There's no strength. So squeeze, right? The reduction of volatility. But what comes out of that squeeze? Now here's where we fire, right? Now there is a squeeze going on right here. We fire just out of it. So you might have waited a bar or two to come out of the squeeze. Let me reset this here. But look what comes from that. Right, there's the trade right there. It's a straight line. So how much is there? So if you waited, right, let's say you waited and you went right there. There's 38 ticks right there. Okay, so hopefully you get a sense of that, but I got to show you a couple of other examples here because they're going to be better and worse. Right, so here's one that would be a failure swing. Now, questionable as to whether or not you take this or not, right? So I'd be right here doing the same thing, right? So here's a wick, right? Note, right? Real time. This is built into our toolbar, right? I just did a video on some of the custom tools in here. I didn't go through every single one of these, so you could go back and watch that video as well. I just put it up a couple of days ago. But so here's another very cool tool, right? I can draw these anytime. It's just real-time supply and demand. I can just lay them on there. I don't want software doing it for me. I want to do it. I want to say, okay, that's the demand, that's the demand, that one broke, that one didn't break. Okay, but I'm just going to pull those off for right now. So look here, so I get a swing, I get a retrace. So is this, so I've got, well, I want this. I've got a swing, I've got a retrace. Now, is it going down? Well, that would be a trade that I would have considered looking at here. I've retraced, this the gray line here, that's VWAP, right? So I've had a retrace right to it, and now I'm heading back down. Well, note here. Right, so here's one that you would have probably scratched on. So I get a retrace here. I don't cross the river. Now, as I head down, well, I got a little baby squeeze here, but I don't. The reason this would have been suspect is that I don't cross the river yet again. So you'll note here when there's good momentum, here's the arrow that fires here. We cross and we can stay below the river for an extended period of time. Here's an extended period of time above the river. But here, even though I've got the setup here, I still can't get across the river. So if I was a seller here and it started to turn back up, that's, oh, caution, right? Likely the momentum here is waning and I'm going to end up with a double bottom, which is exactly what we get, right? I get a double bottom. Right, so it's slightly higher low, but that's a double bottom, right? And you can see here what's happening here. I couldn't get across the river, so I would have been concerned about that trade, right? So maybe you're tightening up the stop a little bit, or you just bail. If I can't get across the river, because the river is the confirm. So if I took 1 in this or 5 in this, I'm waiting to take the next 5 when I cross outside of the river, because that's my momentum tell. Okay, momentum is firing. I'm crossed the river. I've got a retrace that did not cross the other side. Do I want that trade? Well, in this case, right, this would have been a scratch or a small loser. Now, immediately, what happens going back the other direction? I get a swing and I get a retrace. Now, look where I am. Now, the dots have gone green. We're on the other side of the 0 line, the wicked wave, other side of the 0 line. And here's where you get a good example of the two working together. So I get a swing. Remember, we're constantly looking in threes. So here's the 3. Right, here's the swing, here's the retrace, here's the external retracement. So I have the classic external retracement here. I'm coming here's another, again, you can't after a while, right, all you see is threes, right? And same thing, right? Another 3. It's just 3 after 3 after 3. If you just start to focus your eye that way, a lot easier to do with Renko bricks. If you just focus your eye that way, it's going to help you. Okay, so here's the next retrace. Now, everything here, again, dumbass filters. What side of the 0 line are we on? What color is the devil's pitch? What color is the wicked wave? What color are the center lines? Right? This is the vortex indicator. This is a 20-period volume-weighted moving average. What color is it? Green. Right here, is there anything down below saying to be a seller? Nope. Hey, dumbass, why are you thinking about selling there? Right? Literally, that's what goes off in my head. Okay, so we get the retrace. We don't cross the river. Right? We go back up. There's the trade, right? We go and we actually do cross the river here. That fires the arrow. That's the confirm. Now, you didn't get a lot more out of that, but there's the trade. And again, it's more than you realize, right? So if you took one, ended up with 2, well, there's 16 ticks there, right? Not huge. Now, what happens immediately following, right? What do we get? Another 3. Right? It's just constantly 3s, right? 3s all day. Swing, retrace. Oh, well, look what just happened up here, right? I got another supply zone. What do I retrace to? Right to the edge of it, right? Look down below. What caused that wick? Sellers, right? Swing, retrace. Now, I cross the river here, right? So look below. I cross the river. The wicked wave, the RSI is below the average. Now, I retrace. So here's the setup. I mean, it's just simple as mud, right? That's the trade we're looking for. That's where I started the video. That's all we're looking for, is that right there. Okay, so swing, retrace. Oh, I get across, I just get 1 BB across the center line, but the market is not strong enough here. The momentum is not strong enough here for the MACD to cross the Bollinger Bands. We can't cross the river. Now look at the RSI. Right, look, it's not strong enough here to get on the other side of the average. When the market is trending, it looks like this, right? It stays on the other side of the average until, oh, potential weakness here. Look, weakness. Back to the trade. Here's the swing. We go up. Now, you don't know, right? If you're not using this, you're looking at that going, hey, that looks to me like, hey, that could be a measured move that I always hear Sam talk about. Look, oh, we've gone right to the golden zone. There's the target. That's where it's going. It's going right there. Right? Swing, retrace. We're between the 50 and the 618. Guaranteed an algorithm kicked in there. Right, but algorithms are on the wrong side all day long because they're trading both sides, right? So they don't care, right? They don't care if they lose on this one because they'll get the next one. If you were thinking that right there, and you're saying, oh, the bars just went blue, is there anything here, right? We can't cross the river, center line red. The RSI on the other side of the average. It's too weak to get across the average. I'm coming right into a supply zone. Up I go, and now I roll back over. Let me take this off just so you see it. Now I can't cross. Now I roll back over. Right? Once I get, so you could have waited here. You could have been a little bit early. Once the bars start going white, once the RSI turns red, if you're an aggressive trader, as I often will do, I'll take 1 there. If I get the arrow, right? If I get the signal here, now that happens to signal right on a 1 dot squeeze, so we have a slight little contraction here, but the trade is right there. Come here. So from here, it's just, you're going to assume a couple of ticks of slippage. What's there? 15 ticks. Right? So it's not a huge winner. Not a huge winner. I'm going to show you plenty that are bigger. But I just want you to get the concept on small little micro trades as well as larger trades. Okay, let's take that off. What happens next? Swing. Again, it's just all day long. Right? It's just 3s. Right? Now you could say there's the 3 right there. Or you could say the 3's up here. Right? However your eye is drawn to it, right? Either way, it's just a series of 3's. You could say this is just another internal 3, right? It's just another 3, right? It's all 3's. It's all we do is 3's all day long. Okay, so swing, retrace. Well, this is kind of nice. Look where we are, right in that rotation. We're between the 21 and the 55. That's a nice market rotation. When it's trending, we swing, we retrace between the 21 and the 55. Look here. Look at the dumbass filters. Is there? So you might say, hey, is that going down? Maybe. Oh, I've got pink bars. Maybe here. Maybe we're top heavy. We're going down. Is there anything below here that says sell that? Nope. No. What color is the devil's pitch? Green. What color is the wicked wave? What color of what side of the zero line are we on? What's the center line? What's the center line color? What's the edge doing? All right, here's the trade. So we swing, we retrace. We cannot cross the river. We don't even get to the median, to the center line. Look at the edge, right? So that little C that fires there is a continuation pattern. If the RSI dips down, we get 2 little bars of white here. That's what's creating that because the RSI is now falling. Note we do not cross the average. Now the RSI goes up again. So I get a taller bar here. The RSI goes higher. That's what creates the green line, the green bars. We stay above the average. Up we go. Look at the edge. We don't even cross the center line. So as we start heading back up, now if you're an aggressive trader, you might take one because the same thing is going to happen right here. So as you're sitting right here, you're looking at that going, that's the resistance. So if I'm aggressive, I'll take one when I start to see these turn back the other way. So I see the color change. So I see us go from white to blue. Okay, heading back up. Do I know if I'm going to break that? No, I don't know because that's a resistance level that was created. Look at the big block here that created it. Right there, right? Something had to cause that to create that wick. There's the sellers right there. After all that sell volume, that's all they can get is a couple of ticks, a couple of bars here, a couple of ticks lower here. We run right into this structure that's sitting right there. All these prior highs. We can't get any lower. We can't cross the zero line. The RSI can't. Here comes all the buyers. Right? Look at these 2 bars. Big 2 bars in a row of big buyers come in. What are they doing? Right? Where's the trade? Right here. Right? So you could have taken this one here. If you maybe had one, you added one here because here's the confirm. When we get on the other side of it, there's the arrow as the bars are turning blue. I got that little move right there. Well, wait, what happened right here? Oh, wait a minute. Do I need to get out of this trade? Well, you could have, right? There's nothing wrong with that. That's not a bad little trade. There's 12 ticks, right? You take a 2 lot, okay, banked 120, good for you, right? So you may have gotten a little more here, so maybe you got 150 in total off if you were in a 2 lot. Well, you get a nice little retrace here. You get 2 bars down. What do? We run right into the 21. Look, right? You see here, we don't even make. We don't even get wet. We don't even get in the river. Look at the wicked wave. 2 bars down of red, but now I'm going back again. I've got one. Look here. Do you see it here? Again, I just emphasize this because it's so powerful. Look at the huge bar of selling that comes in here. Sellers, they have to create that wick. All that selling comes in. That's all they can move the market. That's all they got. Buyers take right because in the same sense that sellers had to create that wick, buyers had to create that wick. Right? Otherwise, we would have just drifted lower, right? But buyers step in. Now we're back up, right? So this would have actually been if you took one here. Here's a confirm. If maybe you took one off, you get another one here, right? It's the exact same setup. Don't cross the river. RSI stays hot. RSI stays above zero. We don't cross the average. Up we go. You got another. Oh, what do you got there? From there, you got another 16 ticks. Now, what happens here? Now look. Oh, this is a good example. All right, I knew there were a lot of good examples in here. God, this is so much for being a short video. Okay, but I think if you guys are traders here, you will appreciate this because once you internalize this, I promise you, your trading results are going to improve. Now, look at the difference here. After this little set of swings here, again, what do we see? There's my 3. There's my 3 right there. Okay, now what happens? Oh, across the river. So what am I immediately? I'm a little bit concerned about. Oh, wait, right? Momentum has shifted. It's not going to let me do it. Momentum has shifted, so I draw it this way. So I might say, oh, I've got a little supply zone up here. I've got a little resistance up here. Hey, since I crossed the sell side, the momentum's down. Maybe I got to be worried about us doing this. Maybe we're just going to come up and fail here, and I'm going to end up with a little micro 3. That's all that's going to happen. Right, so right here, this is something has changed now. So even though there's another little push in it, well, number one, here this ends up, we're here right on the value area high. That's the IB high right there. We actually don't make the IB. And it's past 11, so the 1030 locked in the IB. We don't make it, and if you're not familiar with the IB trade, go watch that video right now. That's easy money almost every day. Okay, so now look here. So we get this last little push up here. I'm just staying with this conceptually, right? I just want you to follow. Now, look what happens here. So I get a swing. So we can just move the threes, right? So I get another set of threes. So here's my pivot low swing right here. I get up. So I've got my little pattern, I've got my little three right there, but oh, what happens as I get up here right to the value area high? I'm approaching the IB. Look at the edge. I can't cross the river. Market doesn't have enough momentum. Look how easily, boom, boom, boom. All of a sudden, can't cross the river. Look at the RSI. Oh, we went underneath, right? So signs of weakness are showing up. Right here, oh God, come here. Right here, signs of weakness are showing up, because I can see that the RSI has now weakened enough to fall. Look here, as we're going up, we're above the average. Now I fall below. Yeah, sure, I still got rising RSI here, but you see, so it's not that that couldn't carry on and go 20 points higher. It's just that, oh, I got a little bit of caution here. I'm under the average here, so the market has weakened from where it was here. It's a little weaker. So as I'm looking at that, and I'm going, oh, do I want to, oh, all right, so is this, oh, I mean, hopefully you're starting to see this. Would this be a place, oh, maybe I'm going to get that, right? So there's the swing retrace it pops to a new high. Does it look like I'm going to get that? Well, here, since I can't cross the river, I'm already immediately alerted. Okay, whoa, 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 losing steam here. So what happens here? I get a swing. All right, I'm assuming you guys are starting to see this. Retrace. Okay, what happens on the retrace? Well, number one, look what's happened below. Right now, I couldn't cross the river. Now the RSI is hard red and we're falling. Now I'm back in the chop zone. The yellow gold dashes here put us back in the chop zone. That's inside plus minus 5. Now, so the wicked wave's in the chop zone. Look at the devil's edge. I'm below the zero line, center line. This is the vortex. The center line has gone red. This is a slightly lagging, but it's a trend filter. So I've gone red here. Dots are red. The RSI is below the zero line. We're in the chop zone. What color is the pitch? What's the volume? Right, again, dumbass filters. Is there anything here, anything in those dumbass filters saying be a buyer here? Nope, nothing. Even though I could probably draw this up here, just looking at it, I could probably draw this up and say, oh, well, this one broke the golden zone, right? So you'd probably go back one here. There's probably a 50 right there. So you're at a 50. So swing high, swing low. Hey, we're in between the 50 and the golden zone. I know you've told me that's where an algorithm is going to kick in. Well, yes, an algorithm did kick in there, but they lost that one, right? For all we know, it's the same company's got something on the other side with separate accounts. We're never going to know. We just know that when it gets there, an algorithm kicks in. Well, the same thing happens on the other side, right? So I can draw the same thing here. So if we go, I know this is a little hard to see. I was looking for bigger versions. Now here, note, right? Look what happens, right? We're between the 50 and the 618, right? So the same thing is happening on the other side. Oh, it's hard. Well, you get the drift here. So we swing up. We get between the 50 and the golden zone, right? Down we go. Let me pull that off here. So where's the trade? Here's the trade right here. I can't get across the river. This is so it's actually it's a mirror image of what was happening over here, where we couldn't cross the river below. Now I cross the river. I retrace. I don't cross. Here's the trade, right here, right there. 27 ticks. Right, and what happens here? Same thing. Now here you do get a little. You get this fires. We get the hard red dot outside of the. Let me just reset that here to get the arrow there. So we do get the push outside, but look how far you've gone, and you're sitting right at VWAP. So right there, do you want to sell that? Well, that's not as good because as we were talking about earlier, the market tends to. It'll ebb and flow again unless there's news driving it here. So I've had one swing, a second swing. Do I want to take that here as I go right into VWAP? Okay, so maybe, right? And there are going to be days where that may be a trade that it works out here, but you're sitting kind of right back here. There's high volume here. You're right. The VWAP is right there. I'm not sure you would want to take that one. Again, I understand in hindsight, right? That's much easier to say, I wouldn't take that one. Maybe you would take that one, but at this point in time, you've had one winner. You've had this trade. This is a nice winner here. Maybe you're looking to add one more there because you don't know. That thing could keep going. But very quickly, as it gets down here, look what happens here. And so this would be a tell for you. Oh, here, I want this. So as that fires here, we get 2 dots out of it. Now look right here, the next bar. What happens? Well, I get a little increase in volume, which creates the wick. Now quickly, I'm back in the river. Look at the RSI, has now gone green. Pitch, it's not quite green yet, but it's getting pretty close. Now look what happens right there, right on that bar. The RSI, right here where the pitch goes green. We go green here. I get that bright green, maybe meaning that the slope of the OBV is accelerating higher here. RSI crosses the average. Here's the devil's edge is firing here as we go across the river here. But look right here. I've got a squeeze right in the middle of that. So you might not want that one there. But this is not a trade I would take. That's not the trade. Even though it ends up being a winner. Hey, you got, all these things are firing. That's not, oh shit. I didn't want to do that. That's not the trade. Oh, hang on. Let's get this back. Sloppy mousing. All right, where was I? Okay, here we were. Okay, again, this is today's price action. So here's the swing, retrace. Here's what we were just looking at. Here's the low. I get a swing. I get a retrace. So you can already see it. Right, I know if you're new to this thinking, right, this will make a difference. Okay, so what do I have there? I have my classic 3. All right, so what happens on the retrace? Swing, retrace. What happens here? Now we do get a squeeze here, and the assumption is, remember, so you may or may not want to enter during the squeeze. During the squeeze, you might take 1 there as we start to push higher, but you're coming out of a squeeze. Well, remember, the assumption in a squeeze is that reduction in volatility is often followed by an increase in volatility, and that's exactly what you get here. So if you were conservative here and you were waiting, well, there's 2 things you could do. You could, where's my line? You could wait for a break of that high. Right, saying, okay, I got a break of that high. Look what happens as we break the high. The bars go hard blue, right? So I know the market is moving more easily here. Look what happens as the 1 bar before going hard blue. There's the edge firing as we cross the river. So if you were being more conservative, your entry would be right here. Now, you didn't get a ton there, but you got, to the high, you got 15 ticks. All right, if you waited, right? So it's, again, it's you're not getting rich on that trade, but if you had two or three lot, that's not a bad result. Now, quickly, and again, how far do you want to be taking that, going right into the value area high? I would tell you that's an area to be on alert, right, for possible resistance, because algos will respond there because algos respond in all the logical places, right? The day's open, yesterday's close, value area highs, VWAP, value area low, the IB high, the IB low, because they're obvious, right? Amazingly, people don't recognize that, and I see people buying into the value area high all the time. Now, sure, there are days where it's going to blow right through it, but for the most part, that's not a place to enter the market because you know there's going to be resistance there. I digress. Okay, coming back down here, and then I'm going to try and move to a different market here because I've kind of belabored the point here. So you could make a case here that you had one here, right? You got 1 little dot heading back, can't cross. Look where the RSI is, right? Look what the color, dumbass filters. What color's the pitch? There is definitely a little trade right here, and this one actually works out pretty well, right? So you get the swing. Here's 2 bars that go back, and then there's a nice one right there. So that's a nice looking 3 right there. So swing. We head back, can't get even a little divot here. Look at the, let me get the bar here. Oh, come here. Look at the size of the volume that happens right here. That's big sell volume right here. And the market goes back up. What? Well, something, I think that's the highest volume of the day. Well, something's going on right there. All right, so something, and then we get enough buying here. Note the next bar is up. I get enough buying here to create a buy wick, and then I get another sell wick. Right, so as this starts to come, so as that little dot starts to go, you're thinking, hey, maybe what's happening here is we're just going to do this, and we're going to go up here. All right, so you're right here. Do these say be a buyer? Right, we're below the Bollinger Bands. Center line is red. We're below the average. Pitch is red. Right, sellers are in control. Does that say be a buyer here? No, it doesn't. Is there a potential short sale there? Well, look at the edge, right? Again, right? So there it is. If you wanted to be conservative and wait for the break of that low, what did you get there? It's 30 ticks. 30 ticks. Okay, I've probably done enough here, and this is just today. Just today. Right now, there are little ones here, yeah, but you're running out of steam. We're going to this. Oh, what shit? It's past 4 o'clock, right? So I guess we don't have much going on there. Okay, let me just quickly gone way too long, right? Way too long. Let me pop this up here, and I'll wrap up here. I was trying to show you some other markets, but the concepts got a little away from me, so probably everybody's long gone from watching this.